First is basically, that's the concept a little bit, and then we'll start a question exercise. Okay. So this exercise 2 we have done. Now we are talking about yet another kind of a question. Okay. So it starts from basically here. Now this is the final answer. Okay. So let me start. Okay. Fine. So Srishti, are you there? Srishti Khanna?
Yes, sir.
Oh, can you read that?
Yes, sir. Concept of ITC reversal for exempt supplies. As per GST rule, ITC can only be claimed on taxable outward supplies.
Okay, now you know what happens is that there is a concept of ITC reversal. Now, this input tax credit has to be reversed if you are also supplying exempted goods or exempted services. So, if you are in business where you are supplying both kinds of output supply, which can be exempt as well as taxable. Now, for example, the exempted goods can be like milk or unbranded rice, or a lot of things are there where the tax which are exempt basically. Okay, so similarly for services also. So in case if you are supplying both taxable as well as exempt, then the entire input tax credit will not be available to you. So if you have purchased a lot of material on which you have paid GST, so you have to make a reversal of to the extent of exempt. So we'll understand that. So as per the GST rules, ITC can only be claimed on taxable output supplies. Read further, Christy.
If a business has both taxable and exempt supplies, the proportionate ITC corresponding to the exempt supplies must be reversed.
Okay, so that means if you're having 100 rupees of output supply or 100 rupees of sale, and if 20% sale is exempt, then you will be only allowed 80% of the input tax credit. It's as simple as that. 20% needs to be reversed. Okay. Now this is the formula. How do we calculate the reversal ratio? Exempted supply divided by the total output supply. That means the total exempt. Suppose your exempted part is 20 rupees and 100 rupees is to your total sale, including your exempted part. So that means it will be 20%. So a reversal ratio will be 20%. Okay. So then ITC to be reversed will be total ITC available into the reverse ratio. Okay, so ITC reversal applies to all kinds of input credits, whether they are CGST, central sales tax, central goods and service tax, or the state goods and service tax, or IGST. Okay, so yeah, can you read, Srishti?
Yes, sir. ITC utilization after reversal. After computing the revised ITC available, ITC is utilized in the following order. IGST ITC is the first used to pay IGST liability. Remaining IGST ITC is then used to pay CGST and SGST liabilities. CGST ITC is used for CGST liability. SGST ITC is used for SGST liability. If any tax remains unpaid after ITC utilization, the balance is paid in cash.
Okay, now how it happens is that after you have calculated what all ITC will be available to you after reversing some part of it which relates to the exempted turnover, then you have to calculate the tax liability, how much you need to pay in cash. But you have to pay only in cash when you have don't have sufficient ITC credit to you. So first, the order is that against the ITGST ISG liability, you have to first use the IGST credit, tax credit. And then, with CGST against CGST, SGST against SGST, okay? So IGST output against SGST liability like this. So we have done questions, so you all know that, okay? So let's take a question so that you understand in case if you are a bit confused. So ABC Private Limited has the following output supplies. Just read this strictly.
Yes, sir. Example, ABC Private Limited has the following outward supplies. Taxable intrastate sales is equal to 6 lakhs, GST at 18%. Exempted supply is 3 lakhs. Taxable interstate sales is 4 lakhs, GST at 12%.
So now, tell me what will be the, input tax reversal, here. how much percentage, is will not be available as input tax credit. So if you use the formula, so what should be the formula here for calculating the GST, the ITC which has to be reversed? Pranav, Ananya, anyone? Nirdi, are you there, Nirdi?
So can you repeat?
So I'm saying that this sale has been given to you, total output supplies, and we know 6 lakhs is taxable, 3 lakhs is exempted, 4 lakhs is again taxable. So how much portion of the ITC needs to be reversed? I'm asking this question.
So for that, since we know the GST of each respective one, so we calculate 18% of 6 and 12% of 4, and the sum of that, we calculate the difference with the exempted supply, and that difference is the tax that
No,
we'll have to pay.
who is there? Pranav?
3 lakh is
Yes.
the
No, Pranav, actually you're just moving on the wrong direction here. It's very simple. You don't have to even calculate the tax liability. We can.
yeah.
Oh,
So what is the,
it's just 3.
yeah, just think about again, Ananya or anyone, Niyashi or Malaika
So
or,
3
yeah,
lakh upon the total, that is 13 lakhs.
that is how much? 3 lakhs divided by
13
lakh.
13 lakhs. Okay. So that would be your, this thing. So it will be 23.08%. Is that okay?
Yes, sir.
So reversal ratio, we have to calculate the reversal ratio, which will be exempted supply divided by the total output supply. Okay. So 3 lakh is the exempted turnover and 13 lakhs is the total turnover. Okay. So now this is the reversal. Now let's see, let's say what is the total ITC available. Whatever you have made purchases. Can you read this, Shrishti?
Yes, sir. Reversal ratio is equal to exempted supply by total outward supply is equal to 3 lakh by 13 lakh, which is 23.08%. Let's say total available ITC after considering purchases, CGST ITC available is 70,000, SGST IT available is 70,000, IGST ITC available is 1 lakh.
Now Pranav, what you are saying will apply to the ITC, this thing, not to the outward tax liability. So of 70,000, 23% will be disallowed. Of another 70,000, SGST, 23% will be disallowed and remaining will be allowed. Isn't it? Okay. Now we calculate the ITC reversal. Read this.
Now ITC reversal is equal to total ITC available into reversal ratio is equal to 70,000 into 23.08%, which is 16,154 for CGST and SGST, is equal to 1 lakh into 23.08%, which is equal to 2380 for IGST.
Is that clear, Shrishti, to you?
Yes, sir.
Anyone, who joined late, is it clear? Ananya, Vinay, sorry, Arjun, Janardhan, are you there?
Yeah.
Yes, sir.
Okay. Janardhan, have you followed?
Yes, sir.
Okay. Somebody wanted to say something? Okay. Now, just, this is basically a chart. I'll just read it. Step 3, compute the revised ITC after reversal. So now we know the first column talks about, various kinds of GST type, whether it is CGST, SGST, and IGST. And then, total ITC available, which is given the question 70,000, 70,000, and 1 lakh. Or 1 lakh on IGST and 70,000 on 70,000 SGST. So ITC reverse will be this much. So total ITC available will be this. So this will become the cost to the company. Okay. So this will go as a cost to the company. For that, the company cannot claim this thing. So he has to forego that ITC. Okay. So he has to take it out from the ITC books that he has to going to claim that. He will lose the claim of that. Okay. So he will be only entitled for this much of claim. Okay. So step 4, utilize ITC against the GST liability. Now, whatever GST is supposed to pay, he will be paying out of these 3. Okay. Fine. So now we are going to do a question. Okay. So we have just understood, that a company will not be allowed 100% of the ITC in case if he is selling an exempted goods. Ashwin Sikka, are you there?
Yes, sir.
ओके ओके, अभी तबीयत ठीक है?
Yes, sir, it's better.
ठीक है, चलो. ओके, अश्विन, कैन यू रीड नाउ? थोड़ा और ठीक हो जाएगी तबीयत.
Yes, sir.
ओके.
Yes, sir. XYZ Limited is a registered taxable person under GST. The following transactions took place in the month of January 2025. The opening balances were CGST input credit 50,000, SGST input credit 50,000, and IGST input credit 80,000.
So, these are this is the what is given the question. So, there's a company called XYZ. He's a registered guy under GST, and following transaction has been taken in the month of January. So, he had opening balances of CGST, SGST, and IGST, which is given on your screen. Okay, transactions during January. Okay, read this.
Uh, Transactions during January 2025 were outward supply sales, taxable supply intra-state sales 5 lakh GST at 18%, exempted supply 2 lakhs, interstate supply taxable at 12% 3 lakhs. Then the inward supplies purchases with GST paid are intra-state purchases 2 lakh GST at 18%, interstate purchases 4 lakh GST at 12%.
Okay, now we know that outward supplies are given to you, which is 5 lakhs, 2 lakhs, and 3 lakhs. So we can easily calculate how much input tax credit he has to reverse. Okay, and the figure of opening balances as well as interstate purchase figures are given. Okay, so that's very simple. So now read this. Now Arjun, can you read if you are there? So Arjun is not there. Okay, Sika, continue please.
Yeah, the requirements are compare the output GST liability for January 2025, CGST, SGST, and IGST
So
separately.
it is compute.
Compute,
It is compute. Compute the output GST liability. Okay, fine.
okay.
Read further.
Compute the eligible input tax credit for the month and determine how it can be utilized against the output tax liability. Calculate the net GST payable after utilizing ITC. Explain whether ITC can be claimed on exempt outward supply and how it affects the ITC utilization.
So basically, we have to first calculate the output GST liability because output supplies are given. Then we have to calculate what is the amount which is eligible as ITC and how it can be used for utilizing against the output liability tax liability. Then we have to calculate the net amount which is payable after using the input tax credit, and then what happens to the exempted part. So we are going to talk about that. So this is the first step, okay, which is we have given the opening balances. Now this is given the question. So he has a opening balance of CGST of 50,000, SGST of 50,000, and IGST of 80,000, which is given in the question. Okay. Now, output supplies, the sales are also given. Okay. So, 5 lakhs is the interstate sale taxable, and exempted supply is 2 lakhs interstate sale. So that means within the state it is 5 lakhs, exempted is 2 lakhs, and outside the state it is 3 lakhs. So that's why for outside the state, IGST is payable at 12%. Exempted supply, there is no tax, and for interstate, the tax is 18%, which is 9% both CGST as well as SGST. Okay, fine. So inward supply. So we know that he has purchased something from outside, something from inside. So within the state, 2 lakhs, where he has to pay 18% GST, and it will be split into CGST and IGST. 9% each, and then he has purchased certain things from outside the state for which he is going to pay 12% IGST. Okay, fine. So now first we have to compute the liability. So we know that we'll look at the outward output or sale. So the interstate sale is given, which is 5 lakhs. So we know that the tax will be 9% of CGST as well as 9% of SGST. So that will be 45,000 each. Okay, for interstate sales, the tax will be 12% IGST, which is going to be 36,000 IGST. So this is the output tax liability we have calculated: 45, 45, and 36. So we can just put it here, output GST liability, okay, which is 45, 45, and 36. Now we need to calculate what will be the total input tax credit will be available on the purchases he has made in the month of January. Okay. So we found that he had purchases 2 lakh rupees of goods intrastate. So that means, within the state he has purchased 2 lakhs. On that, the GST liability will be 18,000 each on account of both state and center. And then for interstate purchases, since he has purchased certain material from outside the state, for that he would be entitled for a 12% IGST. So which will be 48,000. So if you look at this, so this will be the input tax credit which will be available to him. Okay, CGST, SGST, and IGST. Is that okay for everyone? So
Yes, sir.
okay, so now we have to calculate, what was the opening balance, what was the total purchases he made on which the ITC will be available, and what will be the total ITC available. Without reversing first, we have to calculate, how much ITC is available to him. So, opening balance is given on account of CGST, SGST, and IGST, so which is 50,000. So he'll be getting another 18,000 ITC on the purchases, and the total ITC available will be 68,000 in case of CGST as well as against SGST, the same amount. But for IGST, the figure is 1,28,000, which is 80,000 opening balance plus 48,000 for the fresh purchases which he made in the month of January. So now we have to calculate this reversal ratio. So can you read this, Sika?
Yes, so computing exempt supply ratio. Exempt supply ratio is equals to exempted supply divided by total output supply, which is equal to 2 lakh divided by 5 lakh plus 2 lakh plus 3 lakh equal to 2 lakh divided by 10 lakh, that is 20%.
Okay, so I think by mistake I've added one more zero, so I'll just, delete this. So is this clear to everyone? Pranav, is it clear?
Yes, sir, it's clear now.
Okay to everyone, I believe. So
Yes.
now, yeah. Compute ITC to be reversed. So we know that total, input tax credit which was available was 68,000, and 1,28,000 on account of CGST, SGST, and IGST. Now 20% needs to be reversed, which is 13,600, 30,600, and 25,600. 20% of 68,000, 20% of 68,000, and 20% of 1,28,000. So which comes to. So now, if you look at now, after we have calculated, what will be the revised ITC available, it will be 54,400, 54,400, and 1,02,400. Fine. So that means the total ITC available, and then the ITC reverse, and then the revised ITC available. Okay. Fine. So now he is going to basically utilize the ITC. Just read this, Ashwin.
Yeah, first IGST ITC is used to pay IGST liability. IGST liability is equals to 36,000. IGST ITC available is 1,02,400. Used IGST ITC for IGST is 36,000, and remaining IGST ITC is 1,02,400 minus 36,000, that is 66,400.
So basically, first what he is going to do, that he has got a total input credit available to him is 1,02,400, which is here available last column, and he has to make a liability of 36,000 total on the sales which he has made outside the state. So that means 66,400 will be still remaining as a credit to his balance. Okay. Now he is going to use this balance against the first the CGST. Read this, Sika.
Yeah, IGST ITC remaining is 66,400. CGST liability is 45,000. And used IGST ITC for CGST is 45,000. Remaining IGST ITC is 66,400 minus 45,000,
Okay.
which is equals to 21,400. SGST liability is equals to 45,000, and used IGST ITC for SGST is 21,400.
So if first what we have to do is basically whatever IGST credit is remaining, it will be utilized to pay the CGST and the SGST liability, and that is what we have done. So since 21,400 of IGST was used for SGST, the remaining liability is 23,600. So now, so that means the SGST ITC available is 54,000 after reversal. So use SGST ITC for SGST. So that will be, there will be no SGST liability then. That means doesn't have to pay anything. So if you look at the final this thing, so output, GST liability was 45, 45, and 36. So he has utilized the ITC credit to the extent of 45, 45, and 36. So which means that he doesn't have to pay anything because he had sufficient amount of this thing. So summary of ITC utilization. So this was the ITC available and this is the ITC utilized. So which means he will be still left with CGST and IGST input credit with him because the ITC available is 54,400 whereas he has utilized 45,000. So that means there will be a balance of 14,400. Okay. So that means if you look at the final answer here, so the total output liability was 1,26,000, whereas the ITC available on account of all the three was 2,11,000. So utilize everything and net GST payable is 0. So that means that he will be left with now ITC balance of 9,400 and 9,400 and IGST will be 0. Okay, fine. So is that clear to everyone? Okay, just read this, Sika.
Since some outward supply is exempt, a proportionate ITC reversal was made, which is 20%. After adjustments, the ITC was sufficient to cover the total GST liability, so no extra tax payment is needed.
So now we found that nothing was payable because he had enough ITC credit available to him, and even after taking the benefit, he has still left with some balance with him, which was on account of CGST and IGST. So you can take this balance forward in the next month. But whatever he has reversed, that balance he cannot take. Only the balance after the reversal, which still remains, he can take it forward in the next for the next month's output supply. Okay. So this is the assignment you people have to do. So I have just made it part of the this
Sir, I
thing.
have one doubt.
Yeah, please.
So in the previous question, we have set off IGST, ITC against CGST and SGST liability, right?
Yeah.
And after that, we didn't use CGST, ITC at all, and we took some amount of SGST, ITC to set off the remaining amount. So how is the balance coming out as 9,400 for both?
Okay,
Shouldn't that be more?
okay. So let's go one by one. So first he has got IGST liability. We know that there is an IGST liability of what if we just go back here. So this was the liability.
That was 45,000, 45,000
45,
and
45, and
36.
36.
Yeah.
So this was his liability.
Yeah.
Okay. Now,
Yes.
now if you look at here, this was CGST. How much is available? 54,400 and
Yeah.
54,400.
SGST is also 54,400,
Okay.
right?
So now it is 54,400 and 54,400 available. And how much is the liability again? This thing far less than this. Okay. But first he is going to exhaust his IGST, which is
Okay.
1,02,400. Okay. So if you look at here, the the liability was how much? 48,000. Okay. Fine. No,
Yeah.
liability was 36,000. So he's going to exhaust that. So that is what we have done. Okay. So 36,000 was his liability and his IGST available was 1,02,000. So that means 66,400 will be still left with him, isn't it? This is okay?
Yes.
Okay.
Yeah,
Now
this is okay.
now we start with 64,400 which is still available. And what is the liability of CGST? 45,000. Okay.
45,000.
So he is
Yeah.
going to use IGST ITC of for 45,000. Now so CGST liability will be 0. Okay.
Yeah.
Fine. Okay. So I think you have a point. So remaining IGST will be 66,000 minus itna,
Yeah. 21,400. Yeah.
20,400. So SGST liability.
Yeah.
So he's going to use that this thing. So his balance will be then 23,600. Okay. Fine. Okay.
Yes, sir.
So since 21,400 was used for SGST, the remaining is this. Okay. So that means he has got this. So he's going to use the 23 against the ITC available of 54,400. So that means what will be his balance left now? So this should be the right one. Okay. So I think I made this thing. So I'm just putting my calculator.
Yeah. So he only utilized SGST ITC of 23,600. So the remaining 30,800 will be added with 54,400. So the balance should be 85,200.
How much?
85,200 should be the remaining ITC balance, where CGST balance is
Okay, just
54,400.
here, look, what is the ITC balance remaining here after paying the IGST liability? 66,400. Okay, fine.
Yeah,
So he
yeah,
has completed his CGST liability of 45,000. Okay, fine. So which means that he doesn't have to pay any money on account of because he is covered against IGST. So liability of CGST will be zero. So he'll be still left with 21,400 of IGST. Is that okay? Fine.
yes,
So
right.
then he paid this. So his liability of 45,000. So 45,000. If you take 45,000 minus 21,400. So he'll be left with, a further of 23,600 he'll be left. Okay, so he has paid all the liabilities. He's still left with 23,600, isn't it? Under IGST
Yeah,
credit. Okay.
yeah,
So
got it.
now, since 21,000 remaining CGST liability is 23,400, which he will be covering against 54,400. So that means how much will be left here? 54,400 minus 23,600. How much it comes to?
Sir, it's 30,800 if I'm not
So
wrong.
yeah, you're right. So I'm just putting in the number here. 30.
So the liability is zero, but the
Just
SGST,
hold on. Just
I
hold on. What was the amount? 36,000?
no, 30,800.
30,800. Okay. So this is the balance remaining. Okay. Under under
SGST,
under SGST.
SGST, right? Yeah.
SGST. Okay. Fine. So this is the balance. Number one. Fine. And then he has got some balance of IGST. IGST balance. Okay.
No, so IGST though he has set off, no?
No,
CGST is
IGST is still remaining, na? Some balance with him. 23,600, isn't it? I'm, let me go back. Okay, maybe that I have not checked it properly. So look at this, 1,02,000. Okay, IGST. So first he knocks off his liability of 36,000. Balance remains 66,400. Is that okay? Sorry, for the balance remains 66,400, isn't it?
yeah,
ठीक है
yeah.
अब 66,400 में से CGST liability goes off. So how much is the balance which is remaining with him? 21,400. Okay. So then okay. So that means there will be no IGST left. So 45,000 में से जो है liability चलेगी 21,400 की. So that means there will be no IGST left. Okay, you're right.
Yeah.
So there will be no IGST balance. Okay. So there will be only a balance of SGST. Okay.
So we set off IGST, ITC against CGST liability also. So CGST, ITC is also left
अच्छा
54,400.
CGST, how much is remaining there? 45,
54,400.
54,400. Okay,
54,400.
so
Yeah.
that means the total balance will be how much? 54,400.
Sir, it would be wait
85,200.
85,200.
85,200. 85,200. Okay, so this will be the balance left. Okay, fine with him. So let's now just cross check where at the end. Now look at this 1,26,000 was the output liability. Okay, and total ITC available was 2,11,200. Is it okay? The figure 2,11,200.
Yeah, it's right.
So
It's
then
right.
that means utilization is this. So how much will be left with 211,200 minus 1,26,000. So 85,200. Okay, so that is exactly 85,200. Okay, fine. Fine. So this means this needs to be corrected. Okay. Now tell me what is the right figure here under
So
CGST?
CGST is 554,400.
5,
4.
5, 4.
Yeah.
This much.
Yeah. Right.
And SGST
30,800.
30,800.
800.
Okay. And IGST nil, isn't it?
Nil. Yeah.
So this will be the remaining balance. Okay. So I think I made some calculation mistake somewhere. Okay. Fine. So is it okay now?
Yes, sir.
And what's your good name?
Yes.
Yes, okay. Good. So there was an error. Okay. Now that we have done it. Okay, fine. So now this is the assignment which you have to do, which is based on the similar lines. Okay. So this is part of your slide. So you just do calculate this question you need to do. Okay, which carries 10 marks. Fine. So now I'll just show you one more thing. Okay. Uh, is it clear to everyone now? I mean, the changes which we made in the this thing, there was some error, calculation error, which we uh, made those changes. It was okay. Pankaj, Pavan, Pranav.
Yes, sir. Okay,
Okay,
okay.
ठीक. So
Yes,
that was
sir.
just simply a calculation error. I didn't check it properly. So Yash had checked. So he found that there was an error in calculation. So we have rectified that. Okay. Now, what I'm going to show you, Ashwin, are you there?
Yes, sir.
Okay, so this pertains to basically, so you are staying in Nirvana country, okay?
Yes, sir.
So NRWA GST. So we are going to share about our own, this thing, GST data. Okay, so this is the data for our association here. So we are staying in a society, okay, in Gurgaon. So So this is, this is the summary, fine, which talks about what is the total, ultimately what is the liability we have to pay in cash at the last, okay. For every month, we do calculate every month, okay. So I'm just sharing the data for April 2022. So, okay, so the old data. So where, the total output was, how much? 11 lakh 39,000, the liability on account of both CGST and SGST. And then we had some IGST credit, so we utilized that, okay, against the CGST, and then balance we paid, okay, and so this is adjustment of IGST with CGST, okay, fine. So this was the input credit, okay. So I'm just going to show this was the total liability, okay. This was the liability. How much liability was there? 11 lakh 39,000 for the month of April. And this was the input tax credit available. Okay, fine. Which was, the input tax credit was 1 lakh 33,000, 1 lakh 33,000, and 2 lakh 76,000 here. So this was, applied for paying the CGST, okay, liability. And because we deposited little late, so we had to pay some late fee and interest. So this was the final liability which we paid for April. And for SGST, we had the total outward liability was this much. And the input credit available was 1 lakh 33,000. So the balance we paid in cash was 4 lakh 36,000. Total overall money which we paid for the month of April was 5 lakh 95,000. Okay, fine. So then, this is the list. I'm just going to explain that more in detail in the evening class. Uh, but let's see that this is the total, input. So these are all the, bills we got from our suppliers. So the total, input available to us was how much? 4 lakh 71,000 CGST, 4 lakh 71,000 IGST, and sorry, SGST and IGST was 3 lakh 15,000. Okay. So if you look at here top, so which is, which is giving you, CGST, SGST, and IGST. So this was the bottom column. Okay. And so this was the input credit. Okay. So this is all what we have actually purchased during the, inward supply, which came from, we'll discuss that more in detail. But then we saw the output supply, output. Okay. So this was basically the output. So just to, without explaining much, so there were some exempted part and some taxable part. Okay. So total turnover for us, output supply was 2 crore 39 lakhs for, April. And out of that, exempted was 1 crore 76 lakhs and taxable was 63 lakhs. So then, when we calculated here, so we calculated the ratio here. So our total ratio, reversal ratio was 26.42%. Fine. So this was sorry, this was the eligibility ratio, not the reversal, but balance 84% because our outward supplies was mostly exempted. So only some part was, taxable. So we got almost like 74% of reversal and 26% we had got ultimately this thing. So if you look at here, so this I'll just going to explain, maybe second class time will go away. So I'm just going to shut it down. So we are going to just take some very important thing which we are supposed to do. Okay. Let me just open the slide which I wanted to do. So this part I'm going to take a little later. Okay. This is a pretty longish statement, so I don't want to spend time here at the moment. So I'm going to, talk about this. So this is the first slide, the first PPT I'm just taking, opening. So you can just also open on your laptop the first slides which I presented. Okay. So there are some portions which are remaining. So let us first do that. It is very important for the quiz. So we need to move to the, somewhere here. So we'll start with the invoice. Okay. Okay. Can you see this? Am I sharing the data? Oh, what is the GST invoice? Okay.
Yes, sir.
So Ananya, can you read?
Yes, sir. An invoice or a GST bill is a list of goods sent or services
Okay. Now
provided
it's
along
very
with the payment
important
due for
that
period.
we should know what is a GST invoice and how it looks. And I have also shared an Excel sheet. Okay, which I'm going to open very shortly after we finish what is a GST invoice. So read further.
Who should issue GST invoice? If you are a GST registered business, you need to provide GST compliant invoices to your clients for sales of goods and or services. Your GST registered vendor will provide GST compliant
Okay, so
purchase
that means,
invoice to you.
a person who is going to, who's a registered guy, he has to issue a GST compliant invoices. Similarly, the person who is purchasing the goods, he should get a GST compliant invoices from his supplier. Okay, so what is a GST compliant invoice? I mean, read this.
A tax invoice is generally issued to
So
charge
we all know
tax
that,
and
without
pass on
an
the input
invoice,
tax
you can't
credit.
claim the input credit. Okay. So it becomes basically an instrument for passing through the input tax credit. Okay. So read further now, Ananya.
Invoice number and date, customer name, shipping and billing address, customer and taxpayer GST in, if registered, place of supply, HSN code, SASC code, item details that is description, quantity, in number, unit, in meter or kg or etc., total value, uh, taxable value and discount, rates and amounts of taxes that is CGST, SGST or IGST, whether GST is payable
So,
on
these are
reverse
the
charge basis,
mandatory
signature
fields
of the
of an
supplier.
invoice. The invoice number, customer name, to whom the goods have been supplied, shipping and billing address. So where, the goods are going. Then the customer and taxpayer's GSTIN number. That means what is the number of your customer? What number he's registered with? The GSTIN number. Okay, it's called GSTIN. Okay, place of supply. Where you are going to supply the material. Suppose you are sending the material in Maharashtra or Delhi or where, because it will determine whether you have to pay IGST or CGST or SGST. Now, HSN code or SAC code. So you have to give the code of the item which you are selling. Okay, so it can be goods. So if it is a good, then you have to give the HSN code. Now every good in the world has a code which is called the SN code, HSN code. Now this is generally used by the custom authorities, and we are going to talk about. I mean, soon after this slide. Then SAC code, that is the basically the service code. If you are providing a service, then each services has a code which is again defined by Indian authority. Okay, so we have our own codes, so it's called SAC code. Now, item details, what kind of items you are selling, I mean, in description as well as in quantity, and how much is the taxable value and how much discount you have given. Then the rate of the GST, okay, whether you are paying GST on a reverse charge basis or not, you have to mention that signature of the supplier. So we'll talk about reverse charge later on. So this is the HSN code. Just read it.
HSN code and SAC code are classification system used under the GST Goods and Services Tax GST in India. HSN code is used for classifying goods, while
So if you look at
SAC
right at the
code is used for
bottom,
classifying
HSN stands
services.
for Harmonized System of Nomenclature. It's a worldwide term. And then we have the SAC, which is called the Service Accounting Code. Okay. So this needs to be used basically. Okay.
HSN code have 8 digits, while
Now,
SAC
HSN code
codes
has
have
8
6
digits.
digits.
Now, every item in the world has mandatory 8 digits. Now, it can be a little longer depending on country to country, but the first 8 digits are same throughout the world, because, through the code, anywhere in the world, you can know what item has been supplied to you. Okay. And this is used mostly for custom authorities because they want to know what kind of duty is chargeable under the goods which you have imported from outside. So it was originally used under the Central Excise and Customs in India. Okay.
HSN codes are issued by the World Customs Organization (WCO), while SAC codes are issued by the Central Board of Excise and
Okay, so it
Customs
is, Central
(CBEC)
Board of
department.
Excise and Customs. So now, of course, excise is just limited on petroleum products or maybe one or two products. And, this is our own Indian body which has given a codes for the services as well. Now, this is a kind of an invoice. So I'm going to take you through, a soft copy very shortly, which is, given in the in form of an Excel sheet. I'll just take you through that. Okay. So, okay, read this.
Tax invoice. A taxable person who supplies goods or services is required to issue tax invoice. Tax invoice should be prepared as per details specified in Rule 46. Tax invoice should have unique consecutive serial number in one or multiple series, including alphabets or numerical or
Okay, so it
specific
doesn't require
character,
this thing.
hyphen,
So
or
now we
dash
come to
or
the
slash.
HSN code applicability. Okay. Okay. Now, I'm just skipping this one, but I have added this, which is not there in your slide. So this is very important for your quiz also. Okay. Just you can take a pic of this and just keep it with you for a while. Okay. So important rules for HSN. HSN code requirement based on turnover. Now, if your turnover is up to 5 crores, that means it is less than 5 crores or 5 crores, then it is optional to mention the HSN code. Okay, or maximum you can give just 4-digit code. But if your turnover of a business person is more than 5 crore, then it is mandatory to give 6-digit HSN code on the invoice. Okay, so just read this, Ananya, the bottom ones for business.
For business with turnover below rupees 5 crore, mentioned HSN is optional. For businesses with turnover above rupees 5 crore, reporting at
So
least
that means if
6-digit
you are a
HSN is
business person and if you
mandatory.
are selling goods, then you have to mention this at least 6-digit codes of HSN if your turnover is more than 5 crores. But if your turnover is less than 5 crores, it is optional on your part whether to mention the HSN code or not. It's an optional. Okay. Okay. Read further.
Tax invoice should be issued within 30 days of supply of services or 45 days in the case of banking company
NBFC.
slash
Okay,
NBF,
non-bank, yeah,
NBFC
non-banking financial corporations. It's
or
called
financial
NBFC.
institution.
So if you are a person who is issuing a tax invoice after you have supplied your goods or services, or you have made this thing, you have to raise a tax invoice within 30 days. Okay, of course, people generally raise immediately, but some people take a long time to raise because they send the goods through a challan or this thing and then raise a tax invoice later on. But if you are a banking company, then or a non-banking financial company or a financial institution, so you are given 45 days to raise the invoice. Okay, okay. So now you can just read this, HSN code. What is the, what kind of, like look at this code. Okay, for example, just read this, Ananya.
For example, the HS code for fresh apples might be Chapter 2, that is 2 digits, 08 fruits and nuts, heading 4 digits, that is 0808 apple, pears and quinces, subheading 6 digits, 080810 fresh apple, Indian code 8 digit, 08081010 further classification
Okay, so that
under
means
Indian's
the Indian
tariff
code
line.
for fresh apples can be 080810, and again further classification whether it is the apple which is of a certain like Kinnur or maybe the Kashmir apple, so it can be further lines can be given. So this is the code how it is designed in India. The first two digits is a chapter heading. Okay, like when you look at the custom tariffs or excise tariffs, so it will have various chapters. The first chapter will be the first two digits will give the chapters, and then which heading, like this or subheading, and then the final code of the number. So I'm skipping that. Okay, just read this.
The 8-digit HS code is primarily used for custom clearance in India. India adopted the HS code to 2022 version issued by WCO with updates for local requirement. This structure ensures alignment with global standard
Okay,
while
so
meeting
now
India's trade
we
need.
just move on to the this. This is all over. So now we'll start a little bit and then start. I mean, leave it for the final session, which is going to be in the evening. So this is GST summary final. I'm just opening the another PPT, okay, which we are going to cover now for your quiz. Basically, mostly it will be used for your quiz now. Something which we have already discussed also, which is the SSL code and all, which will be maybe part of your this thing. So we are going to basically move to the GSTR today. We are going to understand the GSTR returns. Okay, we are going to spend most of the time in understanding what is a GSTR 1 return. Okay, because the return number 1 is very important. Okay, which basically becomes the basis for the other returns also, because other returns are all auto populated. Okay, fine. So let me just, So, types of returns, okay? Just read this, Ananya.
Types of GST return. A GST return is a form that a taxpayer registered under the Goods and Services Tax (GST) law
Okay,
must file
now
for
this is the
every
most
GST
important, most
in
interesting.
registered
If you feel
GST in.
like, it can be times it can be a little boring because it requires a lot of explanation. Okay, but it's the heart of the GST Act. Okay, and you must know, whether you will be utilizing the same in your life again or not. But you must know because it's a most important part. And some of you may be even taking a group project and explaining the types of GST returns. And I would like maybe Ananya or maybe another people, I mean, anybody can take, but Ananya, you must take this as part of your project. Of course, even two groups can take the same if they want. Okay. So, okay. So, these are the returns which are, to be filed. So, GSTR 1, which is a monthly return. Okay. For most of the, people. GSTR 2A and 2B are view only because this is created out of the GSTR 1 itself. It is an input credit, tax credit, return, which originally, all the SSCs were supposed to file or all the companies were supposed to file, you know, how many like inward supply goods they have received. But now you don't have to file this because the people who are filing GSTR 1, because they are mentioning your GSTR number also, so 2A and 2B gets auto populated. And why two reports, we'll discuss that. Okay, so 2A and 2B essentially the same return for claiming the input tax credit, because whatever you have purchased from anybody, it will get auto populated here. 3B is a monthly return, which is a complete return, how much you have, sales you have made, how much, input credit which is available, and how much tax you are going to pay. So this is the final return, which is monthly return. Okay, and it again 3B is auto populated. Most of it is auto populated from 1 and 2B, and then only the amount which you are going to pay finally, that needs to be entered. Fine. And GST 4 is basically only for the composite dealer who are basically 1.5 crores rupees of turnover or below kinds of SSCs. Okay, so with the minimum kind of returns they have to file. So first we are going to talk about GSTR 1. Ananya, please read for another 5 minutes, 4 minutes. We are going to continue.
Furnishing details of output supply in Form GSTR1, Section 37, all registered persons shall furnish electronically in Form GSTR1 the details of output
So this
supply
is
of
the
goods or
first return
services
which
affected
everybody
during a
needs to
tax
file,
period.
and this is a return which actually becomes the one return which will use for everything, for 2 and 3 and other things, finally for input as well as for the final return. So this will become the basis. Okay, read this.
Form GSTR1 feature applicability and filing process. Form GSTR1 is a monthly or a quarterly return that contains details of output supply of taxable goods and services. It is an essential return under the
So it is a
Goods and
monthly
Services
as well as
Stamp
a quarterly return.
GST
For
Act
some
in
people, it
India.
is quarterly. Who choose to file quarterly, they can file quarterly. But for most of them, the big businessmen, they are supposed to file monthly. It all depends upon your turnover. If your turnover is below a certain threshold, then you can file it on a quarterly basis. But you need to make a payment on a monthly basis, whatever is your liability. Okay. Read this.
GSTR is a statement of output supply that every registered taxpayer except composition taxpayers must file. It includes sale, invoices, debit credit notes, and export details for the reporting period. Monthly filing if the business turnover exceeds Rs 5 crore. Quarterly filing QRMP scheme
Okay, so
if
that
a
means if your
turnover is up
turnover
to
is below
Rs
5 crores
5
monthly,
crore.
if it exceeds 5 crores monthly, if it is below 5 crores, then quarterly. So QRMP, quarterly return, but monthly payment. But you need to make a payment on a monthly basis, whatever is your tax due, but you can file a quarterly return. Now, we are just going to show you the last thing, which is the invoice on my, this thing, and then we are going to close this chapter for the day. I'm just going to share the invoice which I prepared. Just 2 minutes. I'm going to share this. And then we are going to just take attendance. I'll just take in a minute's time from now. GST invoice. Yeah. So, open this invoice in your this thing. So this invoice I had shared with you. So if you can open, it will be very good. Okay. So this is the invoice. This invoice was issued by Bright Traders. Okay. I put it in a yellow. This is address. This is his GSTI number. Are you able to see this thing invoice? Ananya? Okay, so this is location, from where the
Yes,
invoice
sir.
was raised. It was raised
Yes,
from
sir.
Maharashtra by a company called Bright Traders. This is address, this is his GST. Then the text invoice number. Okay, number is given. Then the customer ID, the ID of the customer whose goods are going to be sent. The name of the customer is Tax Solutions. The address of the customers and due date when he is going to pay the money. Okay. Now the date when the invoice was raised was 5th of February. Okay. So that means he is going to get his money on 20th of February, and he has raised the invoice on 5th. So this is a credit invoice. That means he's giving a credit of 20 days for the supplier to pay. Okay, for the customer to pay. Then the GSTN number of whom? Tax Solutions. Okay. Then the point of supply. That means, which is Karnataka, where the goods are being sent. Point of sale, okay, or supply, which is Karnataka. So that means goods are moving from Maharashtra to Karnataka. Okay. So it will carry an IGST. Okay. Then the product number, three products, okay, their IDs, and the product description is laptop, monitor, wireless mouse. Then the HSN code is given. Okay, can you see that HSN code? Then the MRP, what is the price? Then the quantity, taxable value. Okay, quantity 1, quantity 2, quantity 3. So these are the number of quantities supplied. So 50,000 is the MRP is 55,000, whereas he's supplying after a discount at 50,000. And then here the MRP is 12,000. For two, he's supplying at 20,000. That means he's charging 10,000. Of course, the MRP is, so he's giving some discount. And this is, he's selling at 1,000 rupees, whereas the MRP was 1,200. So this is the, the rate of GST. And since the goods are moving out of the state, so there will be only IGST. So 84,000, 73,000 is the value, 11,000 is the IGST, and 84,000 is here. Okay, so it is given here again. Fine. Okay, so then he'll have his signature and everything, and he'll issue this thing. Now there are two more things: credit note and debit note. First is credit note. Now he has supplied the goods, but then later on the customer, the tax solution said that we have agreed for a price of 45,000 and not 50,000. So give me a credit of 5,000. So he is giving a 5,000 credit. So that means he is going to give a credit of 900 on account of GST and 5,000 on account of difference. So credit amount will be 5,900. So he had supplied originally at 50,000, but then the customer said that भाई हमारी तो बात 45,000 की हुई थी, 45,000 की हुई थी. So give us a credit note. So he is going to issue a credit note, or it can be even a debit note. So he supplied Dell monitors at 20,000. But then you said कि हमारी बात तो 25,000 की हुई थी, यानी 12,500 की हुई थी. So then he said, okay, I'm going to raise a debit note on you for that amount. So these are the debit notes. After the invoice has been issued, you can issue a debit note or a credit note if there is a discrepancy in the invoice. Okay. If you have raised the invoice a little more, you can issue a credit note. If you want to raise some further amount on an existing invoice, you can do through a debit note. Okay. Or you want to give some discount, then you have to issue a credit note. Is that okay? Is this clear? Pranav? So there is a concept called
Yes,
credit
sir.
note and debit.
Yes, sir.